last weekend when we weren't sure what the outcome of the Brexit talks would be. Now, speaking of value, we also saw net inflows into France and Germany as well over the past week. But to the downside, not all of continental Europe got inflows. Italy seeing outflows of $57 million, most of that coming from a BTP tracking ETF. Yes, Italy might be one of the few bonds that's still giving us a positive yield. Still, that yield near a record low, so perhaps investors not all that interested in owning a BTP ETF right now. Francine?
Danny, thanks so much. Our Danny Berger there with the latest funds and flows. Now, money managers overseeing more than $500 billion in assets are underweight cash for the first time since 2013. According to a Bank of America survey, investors are the most bullish towards risk on assets, stocks, and commodities in almost 10 years. Strategists say the plunge in cash exposure is setting off the bank's sell signal for equities. Well, joining us today is Antoine Linné. He's EMEA head for SPDR ETF strategy and research at State Street Global. Antoine, always great to speak to you, so thank you so much for coming on. When you look at some of what we'll see over the next 2 to 3 months, how different will 2021 be to what we've seen so far?
I think there's a bit of a sugar rush towards the end of this year. Clearly, what was different actually between Europe and the US is that the flows into value in terms of into cyclicals, into risk-on type of trades really came late in the game, just after the vaccine announcement, really. So for all of the buckets of risk-on trades, it's been filled with in the past months or past 5 weeks now. 2021 might be a bit different. I think the expectation for returns might be lower. The good thing, though, is that bond performance is expected to be even lower than that, so that still gives a little bit of a signal to be positive risk assets, equities. There will be some pockets of value to be found, but one thing that we believe at State Street Global Advisors is that the resilience of the market and investors will be retested as we go from maybe one wave to the next, especially in the COVID, crisis.
Antoine,
or in the COVID pandemic.
What happens to the rotation? Yeah, what happens to the rotation? How much more will we see that?
I think there's some room for rotation and some room for if PMI numbers were actually more positive than expected this morning, say for France and Germany in particular. So that's to some extent a positive in the continuation of the rotation. What we've seen in the last week is a little bit of a pause. Obviously, there were a few concerns. You mentioned Brexit, and it's good to see flows back into UK equities in particular. That's a place where, as you mentioned, I don't know if we call that a pure value trade or if we call that a trying to buy what has not been or what has not caught up yet with the rest of the market. I think we'd want to be a bit more careful about the value in the sense of the factor term, but clearly we continue to see some investors buying that. Now, for 2021, we still believe that the US and China and EM to some extent make sense in terms of allocation, even if maybe that might not be fully aligned with some of the European strategists in particular. We believe that there is value left in European stocks.
Antoine, yeah, what happens to fixed income in Europe and elsewhere in 2021, and how do you play it through ETFs?
So in 2021, we keep a long bias towards carry, so going long investment grade credit. To some extent, there's not a lot of fear of a kind of big duration move in the euro space. So the curve in euro should be relatively well anchored. The ECB is in the market. Inflation remains really lackluster. So there's even if PMI numbers were good, I mean, inflation is not a signal that a strong recovery is en route. And as a result, we're positive, being long investment grade euro corporate, being long US investment grade as well, and we would want to play tactically going long high yield through ETFs, of course, because they're an easy tool to get into the market. Going long high yield when spreads widen a little bit. So on a bit of bad news, this could be an interesting strategy to play. Other places, of course, which are quite important if you're looking for yield and for a catch-up in terms of performance, it's emerging market local currency in particular. So there still is a pickup to be had because of further dollar weakness. As a euro investor, and maybe as a sterling investor, because sterling is relatively fair valued at the moment, or even a bit expensive to some extent, you might want to hedge at least your cable or your euro-dollar exposure. I wouldn't hedge the underlying EM currencies, but I would hedge my exposure to the dollar and try to benefit from the good performance or catch up of EM currencies like the Brazilian real and the Turkish lira.
Antoine, overall, given the ETF market in Europe is so much smaller than the US, how much are you expecting it to grow because of what we've seen this year? There's been a lot of appetite for it. Does it double in the next 5 years?
I think we've put a paper back in September in terms of the growth, and I think we called it to crisis and still growing. The market in Europe, we were expecting it to maybe touch $1 trillion later in this decade. Clearly doubling it by 2025 might not be a crazy idea, given the speed at which it's growing. Now, it is fair as well, and whether it's about fixed income or about equities, it is fair to say that the penetration of ETFs in investors' portfolio is lower than it is in the US. It is clearly still growing thanks to what we would qualify as institutional investors, rather than the more retail type of investors, because a lot of the ability for ETF issuers as well to sell through bank networks and so on is maybe more limited than it is in the US. So from that standpoint, the opening up of that part of the market will be good, but $2 trillion, should not be too difficult to get to by maybe 2025. We've got to be careful about making those forecasts, but that's in 5 years' time now.
Yeah, Antoine, when you look at some of the appetite for ESG, how much will this market grow? So if you're expecting big growth for ETF, what's the part that ESG ETFs will play in that?
That's been the I think if I were to remember three things about 2020, it's adoption of fixed income ETFs by a broader number of investors. ESG as a key signal of a tipping point or a turning point in terms of the flows. And if you're thinking about the acceleration of the number of products that have been launched this year, 60 or more equity ESG ETFs, close to 17, or let's say close to 20 fixed income ESG ETF in total. So I do believe that this is clearly the beginning of a trend. Obviously, the numbers are staggering in terms of flows. There's been a 100% increase in fixed income ETF flows from 2019 to 2020. We might not go to 100% again in 2021, but it would just mean gathering $6 billion in fixed income ESG ETF, for example. It's not like an unsurmountable task, I would say. So this is, in our sense, a strong growth market for the overall industry, and it has an opportunity to catch up quite significantly. Just sorry to focus on fixed income just for 1 minute, but if you're thinking about how small fixed income ESG ETF is across the globe, you've got roughly $1 trillion of assets in fixed income ESG strategies in the fund market. And the ETF is really, really small in this segment. It's got you've got 15 billion in European domicile ETFs at the moment, so a lot of space to grow.
Antoine, thanks so much. Antoine Linné, there, EMEA head for SPDR ETF strategy and research at State Street Global. Now, coming up, has a rotation into value run out of steam, or has it only just begun? We'll discuss that more and bring you your Smart Beta scorecard for 2020. That's coming up next, and this is Bloomberg. This is Bloomberg ETF IQ Europe, everything you need to know about the funds and the flows. I'm Francine Lacqua. Now let's take a look at which smart beta strategy has been gaining. Here's Danny Berger with your smart beta scorecard for 2020. Hi, Danny.
Hi, Francine. Look, ESG absolutely dominating